So in this video, I'm going to be giving you a complete guide on how you can trade Forex and become profitable as soon as humanly possible. So let's start off very quickly by getting into what is Forex trading. Forex trading is when you exchange between two currencies around the world. So think about it as if you've ever been on vacation somewhere. Right now, I'm in Cairo, Egypt, and $1 equals 50 Egyptian pounds. So when I came to this country, I exchanged $1,000, and in exchange, I got back 50,000 Egyptian pounds. Now let's say before I leave Egypt, I end up spending 0 Egyptian pounds. And somehow their currency goes from 50 Egyptian pounds to 25 Egyptian pounds. That means that when I convert it back to US dollars, I'm gonna have $2,000 even though I came here with $1,000. So this is the main concept behind Forex, is predicting patterns in the market which show you when a currency will change. Now, Forex has no centralized marketplace, meaning that across 5 days of the week, you can trade it 24 hours. The markets open on Sunday at 5 p.m. Eastern time, and then they close on Friday at 5 p.m. Eastern time. So across this entire 5-day period, I can trade at any given moment that I want. Now, you don't need to take a drastic change like a single currency from 50 to 25. All you need to do is capture a super small value. These values are called pips. Pips are considered points in price. Now, one way we can see pips is by looking at this pair right here, Euro USD. So let's say Euro USD is valued at 1.11640. This means that every 1 euro you have is equal to $1.11640. Now, a pip is the second number from right to left. So if this currency pair fluctuates from 1.11640 to 1.11650, then that is 1 pip in the charts. And usually any good trade only has to move about 20 to 30 pips on any given day. And from these moves, you can replicate those same exact profit targets that I've been hitting. It's important to note that there's 3 types of traders. Our first type is a scalp trader. A scalp trader is going to be someone who takes very small moves in the market, and these movements are going to happen very fast. A day trader is going to be somebody who holds their position throughout 1 day or 2 days possibly, and is looking to catch a medium-sized move. And then we have swing traders who hold their positions for multiple days or weeks, sometimes even months, and are willing to just let their positions sit and do their things over time. Now I want to explain an actual currency pair. A currency pair has 2 things, a base and a quote. The base is the very first currency that appears in the pair. So in Euro USD, your base is going to be the euro. The quote is going to be the second currency that appears in a pair, and that is going to be the US dollar within Euro USD. Now the base value is always equal to 1, and the quote is always how much 1 of the base is equal to. Now there's tons of different currencies around the world, but there are only 8 major currencies, and these are going to be the ones that we focus on when it comes to trading. And that is the US dollar, the Canadian dollar, the Japanese yen, the euro, the Great British pound, the Swiss franc, the New Zealand dollar, and the Australian dollar. Of these 8 currencies, there are going to be 7 majors that are consistent of them. And that is when you cross these currencies with the United States dollar. The reason why these are the majors is because the US dollar is the world reserve currency, meaning that anytime 2 countries want to transact, they need to do it in US dollars, meaning that the US dollar is the currency that central banks around the world are reserving. And guys, make sure to pause across this video and that you take very good notes, because I'm dropping gems on how you can actually generate these profits through the charts. So now that we've knocked out those basics, I want to show you guys how you can actually get to the charts so you can see the price feeds and make your own predictions. So we start off by going to tradingview.com, and you guys are going to see a screen just like this, and you're just going to hit get started for free. Right here, you're going to see a couple plans. You don't need any of those. All you have to do is sign up, $0 forever. You're going to put in your email or whatever you want to sign up with. All right, so after you do your email, it's going to just ask you to make a username real quick. All right, so after you verify your email, it's going to take you to this area right here, and what you got to do from here is click markets and then entire world. Now you're gonna see this screen right here. Now what you actually want to do from here is just go ahead and click this little trash can on every single currency in here. And then you're just gonna rename the one that's left to Forex. Now from here, it's very simple if you want to add a pair to your watch list. All you have to do is click this little plus button right here, and you just type in whatever you want to add. So in this case, I'm gonna be showing Euro USD. Now you're gonna click on the pair, and then you're gonna hit full chart, and that's gonna take you to a screen that looks like this. Now what's important to note is you're seeing all these little rectangles on your screen. You're wondering what the heck is going on. Well, let me simplify this for you in the easiest way possible. If you are seeing something that is green here, that means that when the candle opened, it ended up closing above the opening price. And if you're seeing one that's red, it means that the candle closed below the opening price. On this candle over here, you can see we opened at 1.07915 and we closed at 1.09096. So that shows me that the currency actually appreciated based off this candle. Now, how long is one candle? If you guys look over here, this letter D over here signifies that every single candle is 1 day long. So when you guys click over here, you can actually favorite your favorite time zones. So I like to do the 1 day, the 4 hour, the 1 hour, the minute 30, 15, the minute 5, and the minute 1. Those are the time frames that I like to use, and now they will forever be resting at the top of my screen right here, so I can easily switch among all of them. Now up next, I want you guys to have your favorites toolbar, because there are a lot of trading utilities that we're going to use, and this is how you save them. You're actually going to click right here on this little arrow, and you're going to set the trend line, and then you're going to go down and you're going to save the long position and the short position, and then you're going to go down and save the rectangle tool right here. Now you guys are going to see this is going to create a favorites toolbar right here, so all I have to do if I ever want to use them is click right here, and then I just click on my chart and it draws it out. So now that we're on the charts, I know you guys are going to be wondering, which pair should I end up trading? Well, if you guys want to trade more pairs, all you have to do is add them via your watch list. There are 4 major sessions that are in play whenever you're trading. That would be the Tokyo session, the Sydney session, the London session, and the New York session. Each one of these sessions is open during their specific periods of times, and if you guys look right here, you can pause the video and write down exactly what those times are, so you can use that to your advantage when you're trading. Now, in my opinion, it's always best to trade everything with its own currency session, meaning that if you're going to be trading the Japanese yen, you should be trading it during Tokyo session. And if you guys look at this graphic right here, you're going to see the best times to trade the best pairs. I always like to think of it as banks want to move price within their own time. So let's say right now I want to add GJ to my watch list, so I have something to look at during London, as I have a London pair right there, and then I have Euro USD, and let's say I want to add USD CAD as my New York session pair. I'm just going to simply type in the currency names right here, hit the plus sign, and now whenever I come to the charts, they're going to be right next to me right here. Now guys, there's 3 very important market types that we have to be paying attention to. Now these are uptrend markets, consolidation markets, and downtrend markets. As you guys can see here, an uptrend market is going to be when your charts create low, high, higher low, higher high, higher low, and higher high. A consolidating market is when you start to create equal highs and equal lows. You're going to see this as a lot of money resting on both sides, because every single time price reaches that ceiling, it's being pushed back down by sellers. And every single time price reaches that floor, it's being pushed up by those buyers. And then once you start to create lower lows and lower highs, lower lows and lower highs, this is considered a downtrending market. Now there's opportunities that we can take in every single one of these markets to make our money. As when you're trading Forex, you're not only making money when things are going up, you're also able to make money when the charts are going down. Now with these 3 types of charts, we end up having 2 different ways that we trade. We have 1, our fundamental analysis, and 2, our technical analysis. So our fundamental analysis is the data releases happening around the world. Now there's all these major banks always releasing statements about what is going on with their economical situations, and that heavily plays into the Forex markets. So one way that we can easily find all of this information is by simply going to forexfactory.com. Forexfactory.com is exactly where you're going to see all of your data. So right here, you guys can see, I see all of these different pairs, these little different folders, and everything is at a certain time. So I'm going to break this down for you in the most simple way. Over here, you're going to see what day the news is being released, and over here is the time that that news is being released. Now you see actual is blank, because obviously this news hasn't been released yet, but the data that you can see is the forecast. The forecast is what they are predicting these news releases to be valued at. And then you have the previous, and since most of these news releases happen every single month, it is just showing you the last month or the last release is data. Now if you guys click on the detail folder right here, you're going to see a description or a definition that explains to you what is actually being released at this moment and what reaction you could see towards the charts based off of a certain release. Now it's important to note that not every single news release is going to mean something. Yellow folders are very low impact news releases, and you almost never pay attention to these. Then you have orange folders, which are medium impact, and once again, I personally rarely ever look at orange folder news as something that I need to take into bias. But then you have red folder news, which is going to drastically affect the charts, and this is the most important one to play off of. So let's say I'm going to be trading GBP JPY. What I like to do is go to Forex Factory and then click filter over here, click none, and then highlight the 2 currencies that I will be trading, and then I click none once again and only highlight the red folder news. This way I'm aware of any major releases that will happen on the charts, so that way I can help it and make my own bias. Now you guys can see this week there is no major news releases happening for either one of these pairs, but if I go to the previous weeks, you're going to notice, okay, right here I had 2 for the Great British Pound and 1 for the Japanese yen. So based on these releases, I could have actually helped my own trade. So if I clicked over here, I would have seen it says FF notes. Above 50.0 indicates industry expansion, below indicates contraction. And then it even shows you why traders care. So here it shows you that it's a leading indicator of economic health. And you guys can see if it comes out less than last time, it'll pop up as red. And if it comes out better than last time, it'll pop out as green. So now that we've covered the basics of fundamental analysis, I want to get into technical analysis. Now there are two main components when it actually comes to trading and our technical analysis. And one is going to be our order blocks. Order blocks are levels in the charts of supply and demand that simply show you where the biggest moves have happened in the past and are going to happen once again. Two is dynamic liquidity. Dynamic liquidity is a way to identify where the money is resting in the markets, so that way you can look to target the rest of the money. Because think about it like this: the banks make the most money when the most amount of people lose money. So being able to identify liquidity, aka money in the charts, means that those are going to be the target levels for the banks, and you want to trade with that. So just by looking at Euro USD, I can already see that I have this order block resting over here. And whenever I see an order block, I'm going to use my rectangle tool and simply highlight it. So I'm going to highlight this part right here and then extend this towards the right side. If this doesn't make sense to you guys, just hold on and I promise everything will be clear. This to me is an order block because I can see that this is the highest candle price was at before making this huge movement towards the downside. Now you guys can see price pulls back up, and when it revisits this candle, it makes another sharp move towards the downside. Now there are different types of execution orders. When it comes to trading, you have market limits, meaning that you are anticipating price is going to reach a certain level before taking off in the other direction. So if I have a sell limit, then I'm anticipating that price is going to come up to this point and then reverse and move towards the downside. So I can set my sell limit to put me in the trade right when price taps this point. If I have a buy limit, then I'm anticipating that price is going to come down, hit this point in price, and then move towards the upside, and I'm going to catch that move. Now you also have buy and sell stops. Buy stops are essentially when you think price is going to continue up to a certain level and you want it to only get in once it's reached this further higher level, and then you're going to catch a further move up. Sell stops are when you anticipate that price is going to break a certain level to the downside, and then you want to continue and catch that move. Now you also have market executions, which is when you physically click buy or sell and it enters you at the current price. Now I mainly use market execution or buy and sell limits. Now for example, in this trade, I could have set a sell limit right over here, and I could have set my target to where I'm seeing price start to reject a lot. Now how can I see where price starts to reject a lot? This is when we use our liquidity or our dynamic liquidity levels. So if I use my trendline tool, I can look over here and see that price started to bounce a lot once it reached this area over here. Now I can also see price started to bounce a lot when it reached this area further lower. And if you guys don't know, all you have to do to copy a single thing is hold Command or Control if you're on Windows, and then just drag it just like that. And then I would simply have set my target to one of these levels, and you guys can see this would play out to be a 1 to 3 risk to reward trade. Now the markets are closed right now because I'm filming this on the weekend, so I want to show you guys an actual fully played out example. So if I go left over here, you guys can see we had a huge move towards the upside over here. And then that's when I'm going to highlight my order block just like this. And then I would simply set my buy limit at the top of this order block with my stop loss at the bottom. Now, if you guys don't know what a stop loss is going to be the level where you now consider the market is invalid, and so it should take you out of your trade for a loss. Now, opposite of a stop loss, we have a take profit level, which is where you believe the markets are going to push to in order for your trade to be considered successful and you close out for a profit. So here you guys can see that I have a 16.9 pip stop loss. And now I want to target an area where price has been struggling to break out of. So if I look over here and I use my trendline tool, I can simply look and see that price literally looks like a flat line over here. So I'm anticipating that there is a lot of money resting here, and that if my trade is going to be correct, I'm going to play this out for a win at this level. So I'm going to drag this over here and set my take profit value at that level. And as you guys can see over here, you see a 5.3 risk to reward ratio, which literally means that I'm multiplying my risk by 5.3 times if I win. So if I were to lose this trade with $100 risk, I would be making $530 if it does win. To me, those are amazing odds, because with odds like that, you can win literally 1/3 of your trades and still be extremely profitable. And you guys can see just how powerful these order blocks are. Price literally taps in right here and then runs straight out. You don't even catch any drawdown. And if you guys don't know what drawdown is, that is simply when your trade is floating at a negative level. And then you guys can see you let this trade play out and your take profit gets smashed. All right, so now you have all this knowledge and you want to know how can you actually enter a trade. Well, the first thing you need to do is sign up on a brokerage. And I'm going to link the best broker that you guys will ever find in the description. Smallest spreads, smallest commissions, and the fastest withdrawals. So now I'm going to show you guys how to set up an account there. Now, when you guys click the link in the description, it's going to take you to a website like this. You're simply going to fill in all of your information right here. All right, so now when you guys log in, you're going to see a screen like this. And mine already has accounts created because this is where I trade, but every single one of your accounts is not going to have an account. Now, there are two types of accounts that you can make. A live account, meaning that you're going to be putting in your real money to risk on the charts, or you can create a demo account, meaning that you have play or fake money that you are going to trade with so you can practice until you are confident enough to go live. So it's very simple. If you want to add a demo account or a live account, you're just going to click on whichever one it is, and you guys are going to simply click which trading account you want. I'm going to select Islamic because I'm Muslim and we don't believe in swap trading. Then you're going to have US dollar, and then you're going to select your leverage, and you're going to put in simply the amount of funds that you would actually normally open with. So you're going to open your account right there. It's going to give you your credentials, and then you're simply going to go to your trading terminals. Once you're on your trading terminals, you're going to select if you have a live or a demo account. In this case, I'm going to log into my actual account, but if you guys have a demo account, you're going to click on the demo account. And now when you guys are on the broker, you want to create your own new watch list to match what you normally trade. So you would click over here and then click create new watch list. And then you would simply search for the currency pairs that you are going to trade. Now you can also trade cryptos or anything that you find on the broker simply on here. Now, since the markets are closed, I'm going to be giving you an example on Bitcoin. Let's say I wanted to trade Bitcoin. I would simply click over here, and now I have my chart level right here. And now if I want to click a buy or a sell, it's going to be in this area over here. I can click buy or I can click sell. And then on the market, I'm going to select a sell stop, a sell limit, or an actual market execution. And now this is going to be the lot size section. Now, if you guys don't know what lots are, I'm going to explain them to you very briefly. Lots are actually what are going to impact how much every single pip we catch cost. So if I use a one lot on the charts, it's going to mean that every single pip I catch on Euro USD is going to equal $10. Now, instead of having to calculate every single time and figuring out what lot you're going to use, there is an app called Stinu on the App Store that you guys can use, or you guys can simply look up lot size calculator. And all you do is when you open this app, you're going to simply put in your account balance. So let's say I have a $1,000 account and I want to risk 5% on this trade. And then I'm going to put in my stop loss, and I'm going to know my stop loss by looking at the tool over here. Now over here, I can see that this is a 16.9 pip stop loss. I'm going to put in 16.9 pips. I'm going to hit next, and then I'm going to simply click the exact currency that I'm in. So this would be Euro USD. And right there it will tell me that in order for me to risk 5% on my $1,000 account, I would have to use a 0.296 lot on this trade. So now I want to show you guys how to actually manage your trades when you're on the broker. But since it's the weekend, I can only trade crypto. So I'm just going to be opening the smallest lot possible because it's really going to mean nothing towards the account. Now, all I have to do here is simply click place buy order. And then my order is going to come at the bottom over here. You guys saw I didn't place a stop loss or a take profit when I actually entered that trade. And all I have to do to put a stop loss or a take profit is click edit over here. And then I can simply put in my stop loss. Let's say I want to stop loss at 63,000 and I want to take profit at 70,000. Then just like that, I've been able to add them to my trade. If I want to close out my trade, all I have to do is hit this X over here. And let's say some of you guys are going to enter something that's bigger than a 0.01 lot, right? So you might be in a 0.05 lot or something. If you only want to close half of that position, all you have to do is click partial close right here. And then you can click the exact amount that you want to close. So if you want to close out 0.03 of your trade, that's all you do. You do that, and then you hit submit. And now you guys can see that if I look over here, I still have 0.02 lots left. So now you guys have been taught the fundamentals and the technical analysis part of trading. But it's important to note that this really accounts for about 10% of trading. 90% of trading really comes down to your psychological aspect. So a couple tips that I have in order to make sure that you can stay in check psychologically is make sure that you have a risk buffer, meaning that if you lose 2 trades in a certain day, you should just completely stop trading for the rest of that day. You can also have a weekly buffer, meaning that if you lose 4 trades for the week, you're done trading for the week. Making sure that you guys are patient on the charts. It is better to be late and right on a move than early and wrong. A lot of people get in the habit of wanting to catch the move as early as possible so that way they can make the most amount of money. But in reality, this just leads them to lose even more profits. And guys, don't overthink your trades. If your setup is there, it's there. If you stare too long, you're going to force yourself to see that something is there. And that is the worst part about trading, is at the end of the day, we're just looking at a ton of little rectangles on a screen. So it's easy for us to imagine something is really there when it's not. So I've just gone over everything that I wish I knew when I first started trading. And if I knew this information, it wouldn't have taken me 3 years to turn my last $67 into $1 million. So make sure you follow everything that I just taught you, because if you do, it's going to make your success inevitable. Now, if you guys want to learn how to make profits like this every single week, then apply below to work one-on-one alongside me and my team, where we will guarantee you profitability within less than 75 days, or we will work with you until you are profitable. You already knew that trading was the vehicle that was going to get you to have the life that you want to have. You just didn't know how to get there yourself. And luckily, now you do. So if you guys want to fast track those results, make sure to apply below. As always, guys, I'm rooting for you. I'm wishing you the best, and I'll see you guys in the next video.